Now, so this is what we have already seen so far. We have the title of this slide as non-current assets versus inventory. So non-current assets are the asset structure that we have already seen, your land and buildings and your plant and machinery, etc. Whatever assets examples that we have been seeing, all those examples are what we refer to as non-current assets. Your sponsors of the business operations, they are either your owners or the third-party financiers, and they give you funds to acquire your assets infrastructure, right? And this assets infrastructure that we are more familiar with is what we call non-current assets. So non-current assets generally means assets which are going to exist in your business for more than 1 year's time. I will explain the meaning in a bit. This in assets infrastructure or non-current assets are going to house, or they are going to serve like an aquarium in which your fish, which is your principal business activity, in that aquarium of infrastructure of assets, non-current assets, the fish is going to survive, and this is your fish, the principal business activity. The businesses that we know of are, you can classify these businesses in two types. Either they are service businesses or they are trading businesses. Service businesses are the businesses which offer their clients some sort of a service, like a law firm, like a school, like a cellular company, like जैसे Jazz है और Telenor है, Ufone है. These are all examples of service businesses because they're offering some service. Telenor offers cellular service to their customers. LGS offers educational services to the students. A law firm will offer legal services to their client. So these are all examples of services. Now we are going to move on to the trading businesses. Trading businesses are the businesses which buy and sell goods, material goods, not immaterial services. So trading in this particular case, अभी जो हम part syllabus का cover कर रहे हैं, this part deals with this part only deals with trading businesses. So service businesses will come in our syllabus, but after some time. So our initial part is only going to be about trading businesses and what trading. ईमान बदर अच्छा okay ईमान मैं अभी इस discussion के बाद I will reopen the sheet and I will explain the second last transaction. Sorry, I missed your message. So अभी अब ये discussion हम शुरू कर चुके हैं, तो इसको हम wrap up करते हैं, and then I will come back to the assignment and then I'll explain those whatever transactions you're having trouble with. All right, good. So the trading businesses are the businesses which buy goods and then they sell goods. They buy goods at a lower cost from their suppliers, and then they sell goods at a higher selling price to their customers, and that is how they make profit. So trading is buying and selling goods. Trading simply means making profit out of buying and selling of goods. And when we use the term goods, we are talking about the inventory. So that is our going to be main operations for next couple of months. Whatever accounting syllabus topics that we are going to discuss, they are all going to be focused about they're around the trading businesses, and this is how we make our profit. So our sponsors give us funds which will help us to create an infrastructure of non-current assets, and within that infrastructure of non-current assets we will be able to conduct our principal business activity effectively. And how effectively? This is the objective eventually. If we have been doing this effectively, we will end up making some profits. So जब हमने पहला लेक्चर लिया था तो हमने इस सारी चेन को backwards एक्सप्लोर किया था कि our objective is profit, and for that we need to identify an operation, a sustainable economic operation, which actually will help us determine what non-current assets infrastructure we need, and then it will lead us to the further conclusion that how much money that we need to raise from our sponsors. So it's the same chain of events now moving forward. So what do we mean by non-current assets, and how is the trading activity or the inventory is different from what non-current assets are? Non-current assets, when you buy, you don't buy them to sell them again to make profits. You buy them to keep them within your business and to so that they can provide you with that infrastructure in which you will survive. Alina. Okay, Alina, you were late today again. Alina, do you have a clash or something? This is the second time you joined the class late. So आपका कोई clash तो नहीं है?
No, sir, sorry, I marked it wrong in my schedule.
Okay, okay, don't worry. Chalo. So the assets, the non-current assets are the assets which are acquired with the consideration that you are not going to sell them. In fact, you're going to keep them for a long period of time, and their presence is necessary for the existence of the business. Without the aquarium, this is representing that aquarium. Without the aquarium, the fish here, which is your principal business activity, it cannot survive. So non-current assets are all those assets. By definition, a non-current asset is something that is going to continue, that will exist in your business for more than 1 year's time. So non-current assets, the examples we already are familiar with. Whatever assets that we have been dealing with before in chapter 1 and chapter number 2, all of these assets were non-current assets. All of these assets had one common feature, and that is these assets are always going to be there. You want these assets to be permanently installed. These assets are going to provide you with a medium for your existence. So land and buildings, furniture and fixtures, plant and machinery, equipment, vehicles, we are familiar with these examples. These are the ones which we need in order to survive. Without the structure, without the infrastructure provided by these assets, the business ceases to exist. So now comes the other type of asset in picture. We call it the inventory of goods or inventory of goods, whatever, if you want to go with the American pronunciation, right? So inventory of goods by definition is the items bought with the intention of selling them to your customers in order to make profits. That's the definition of inventory. So the difference, you can see this asset, inventory is an asset to us because we buy it, we own it. This asset is different from this asset. The inventory of goods is bought with the intention of not keeping it. We want to keep it as new a condition as possible, and then we will sell it as soon as we get an opportunity to a potential customer. So inventory of goods is not to be held back in our business. We want to get rid of this inventory as soon as possible. So we buy the inventory of goods and we find a potential customer and we sell this inventory of goods. But we do not buy land and buildings and furniture and fixtures and plant and machinery and equipment to sell them again. So we understand the fundamental difference here. Inventory of goods versus the non-current assets. Give me a green check here. Good. Right, Amal? Mehreen, Madiha, आपको समझ आई बेटे? Mehreen, Mehreen. Okay. Now, what are the examples like? Since now we are going to be focusing on trading businesses, so I will not give you examples from service businesses anymore. So ट्रेडिंग बिजनेसेस के लिए आप एग्जांपल ले सकते हैं, जैसे आपके जनरल स्टोर्स, ये जो ग्रोसरी स्टोर्स होते हैं, अल्फता हो गया और जलाल सन्स है. So these are, you can always keep businesses like that in mind as an example. So when you go grocery shopping, you see the grocery items being stacked on those shelves, and then you have your cart and you go around those shelves and pick up the stuff that you need. Those items which are displayed on those shelves are what we call the inventory of goods, right? जो ग्रोसरी आइटम्स आपको उन वुडन या स्टील शेल्विंग्स के ऊपर पड़ी हुई नज़र आ रही हैं, वो आपके लिए इन्वेंट्री ऑफ गुड्स है. बिकॉज जलाल सन्स या अल्फता ने वो आइटम्स इसलिए नहीं खरीदी थी कि उन्होंने कंज्यूम करना थी, उन्होंने इसलिए खरीदी थी क्योंकि वो पोटेंशियल कस्टमर्स को वो बेचेंगे. सो द ग्रोसरी आइटम्स यू सी देयर आर व्हाट an example of inventory of goods. But the wooden shelving or the steel shelves on which these items have been displayed, those shelves were not bought by Al Fateh or Jalal Sons that they want to sell those shelves. In fact, they want those shelves to be installed in their premises so that they can put the grocery items on display on that. And that those wooden shelvings or the steel or metal shelvings that you pick up the goods from, these are what we call fixtures, and that is a non-current asset. So we understand the difference between an item bought with the intention of keeping it and using it for a long time, that what's make your non-current asset, and the items which are bought with the intention not to keep them but to sell them to your customers in order to make profit. Understood? Give me a feedback here, non-verbal feedback on the participants, please. Fajr and Madiha. Okay, Fajr, Madiha. Okay. Another example, a more conceptual way of looking at it. Let's say you are a car dealer. You deal in cars. You buy cars and you sell cars, and you have a showroom on which you display your cars, and customers come and they buy cars from you. You buy two identical cars, same manufacturer, same model, same specifications, even the color is the same, let's say. So the two identical cars that you have bought, one car was bought with the intention that you are going to give it to your sales manager, who's going to use this car for running the day-to-day affairs of the business. And the other car, which is identical in every aspect, that other car was bought with the intention that you want to place it on the showroom so that it can be sold to a potential customer for profit. Now you can see the physical nature is exactly the same for both of the cars, but one of the two cars was bought with the intention of keeping it in your business and using it as a non-current asset. The first car that you decided that you want to give that to your sales manager, who is going to use this vehicle in running the affairs of the business, that is not going to be termed as inventory of goods. That will be termed as a vehicle and will be treated as a non-current asset. But the other car, which is exactly the same and identical in make, model, and specs, that is going to be treated as an inventory of goods because you decided that you are going to sell it for profit. So it's not the physical structure or the physical nature of the item which determines whether it will be treated as a non-current asset or it will be treated as inventory of goods. It's the intention behind acquiring that asset. It's the intent that determines whether this will be treated as a non-current asset or inventory of goods. Do we understand the second example? So the first car is what we will treat as the non-current asset called vehicle. And the second car, which we will place on showroom from where it is going to be sold, is not going to be called a vehicle or car. We will call it inventory of goods. मदीहा आपको नहीं समझ आई बेटा? Okay. Now let's move on to the next slide. Understanding the operating cycle. Now we need to understand the trading operations and how we look at those trading operations in accounting. The purpose of the trading operations, or what we call in accounting an operating cycle, the purpose of this operating cycle is obviously to circulate your inventory in a way that you will be able to make profit. So you want to buy inventory and then you want to sell your inventory, and then these transactions will help you make your profits. So your inventory is the central asset. This is a very important asset. Not that non-current assets are not important. Without the non-current assets, the non-current assets infrastructure, the existence of business is threatened. They have their importance in their regard, whatever. But inventory itself is a very unique asset because this is that particular asset which is solely responsible for making profits. So that is why inventory accounting related to the inventory is going to be very detailed, and since we have to calculate profits, so we will have very detailed bookkeeping procedures and accounting procedures which will involve the inventory. So this inventory comes into existence when you buy it from your suppliers. So your suppliers are what we call in accounting as creditors, or trade payables. Trade payables or creditors are the people we buy our inventory from. The inventory of goods is bought from these suppliers, and that is why I have used the different colors. Inventory is in here green, representing your asset, and the orange segment over here is your obligation, because when you buy your inventory, obviously you owe this money back to your suppliers. But you're going to buy these goods mostly on credit. You can buy them on cash, paying instantly on cash, but you will buy most of the businesses in trading operations, they prefer buying inventory on credit. Alicia has asked a question. Sir, if a person owns a building and then gives it on rent, will it still be a non-current asset for the owner? Yes. Remember, this is a service business that we are talking about. Right now, basically, I just talked about this part before, that there is a difference in trading businesses and service businesses. So if your business is to give your property on rent to someone, then you are actually providing an accommodation service to your tenant. So that's a service business. In service businesses, there are no inventories, or there is no discussion, or a relevant part of the problem here, which means कि कोई asset non-current asset है या नहीं. That property that you are renting out is going to stay in your business for a long period of time, and by definition, any asset that lasts in your business for more than 1 year is what we call a non-current asset. And the assets which are short-lived assets, like in this case, ये अच्छा हुआ question आपने पूछ दिया. So inventory is not a non-current asset, like buildings or vehicles or anything. Inventory does not last in your business for more than 1 year. So inventory is what we call a current asset. Current asset. So the assets which are consumed or which are exhausted within 1 year's time period are what we call current assets. And the assets which last for more than 1 year's time are what we call non-current assets. Right? So inventory is an example of the first current asset that we know of. Right? In fact, there is one more, cash. वो भी आपका current asset है, लेकिन inventory से ही वो generate होता. अभी मैं आपको explain करता हूँ इनका आपस में connection क्या. This entire slide, the operating cycle, is all about this connection. So inventory is your current asset. You will buy this inventory from your suppliers. The suppliers are what we call trade payables or simply creditors. These are the people you buy your goods from and you owe them the money. Then, as soon as you get an opportunity, you will sell your goods to your customers, right? This inventory is going to be sold to your goods, to your customers. We call them debtors or trade receivables. And these trade receivables owe us, and that is why we have green color to represent another asset. So our trade receivables or debtors, they owe us our money, and then they will settle their debt by paying us cash or checks. That's how we create another current asset called cash. And then once we recover our cash from our customers, we are in a position to pay back our suppliers. So this cash goes out with its orange arrow, right? We are settling our debt to the trade payables. So this is what we call our operating cycle. So it starts with your suppliers. You buy goods from your suppliers, you create yourself an inventory, you sell this inventory to your customers, and you create yourself some debtors or trade receivables. These people owe us our money, so they will settle their debt by giving us our cash, and that cash eventually be paid to our suppliers or creditors or trade payables through our debt. So do we understand the operating cycle? This entire cycle is what we call the operating cycle. So give me a feedback here. If we understood the connection between inventory, suppliers, debtors, and cash, they are all connected. ईमान फारूक नहीं बेटा समझ आए? हादिया, मदीहा. Okay, Hadia has a question. Why do all these transactions operate on credit and okay. Remember, the debit and credit that we are familiar with, wo, they are different from what we are using the term credit here. Over here, the term credit simply means that you have bought or sold goods and you have not settled the debt, or the debt has not been settled. So the credit that we use in the double entry system is simply means right. डेबिट एंड क्रेडिट, वो वाला उस डेबिट एंड क्रेडिट वाले क्रेडिट को इस क्रेडिट के साथ आपने कंफ्यूज नहीं करना. दे आर टू डिफरेंट क्रेडिट्स राइट नाउ. For now, you need to understand that these two credits are used in different ways. So the double entry wala debit and credit, it simply means right side or the left side, debit and credit. But when we use the term credit here, a transaction on credit, we are simply referring to the fact that a transaction on credit simply means that the goods were bought or sold, but the cash was not paid on spot. The cash is going to be settled in future. Understood? Adya, do not confuse the debit credit wala credit with the transaction on credit. One of them is a Latin language credit. The other one is an English language credit. They two they sound the same. They are spelled the same, but they should not be taken in the same meaning. Understood, Adya?
Yes, sir.
Okay, good. So we agree this is our operating cycle. Now, the purpose of this operating cycle is to generate profits for the business, right? That's the whole point of the existence of inventory, buying this inventory from here and selling this inventory to these customers. Where is the profit in this operating cycle? The only thing I see is that we buy goods from our creditors or suppliers, we sell them to our debtors, we collect cash from them, and then we settle our creditors. Where in the operating cycle do we find the profit? The purpose of this operating cycle is to make profit. So where is the profit in this operating cycle? Any ideas? We sell them at a higher price. Excellent, Alicia. Alicia Asma, we sell at a higher price to the debtors. Absolutely true. We understand what Asma and Alicia have mentioned in the text box. This is where the profit is. So when we buy goods at a cost. Would carried down balance apply here? The balancing is simply comparing the debit and the credit side. That means additions and subtractions, the opposite factors are going to be merged to find the conclusion. The balancing, in a way, is going to apply here, but we will discuss that part. The double entry records are going to be discussed after that. First, we are going to understand the entire process outside the double entry system. That is how I prefer teaching. That I would like to explain reasons behind the operation outside the double entry system. So once we understand the procedure and why a procedure is designed in a certain way, then we bring those procedures within the double entry system because it will be easier for you to make sense of a debit and credit later on. Yes, Alina, we will do that in a bit. So this is where the profit is. When you buy goods from your creditors, let's say they cost you $100. And as Alicia and Asma has mentioned, that when you sell these goods to your debtors or your trade receivables, the selling price is always going to be higher than the cost of the goods that you have sold, right? The goods that you're selling here, they cost you $100, and you will sell it for $150, and this is where the profit lies. So every operating cycle, once the first cycle is going to complete, let's say this is one product here, so a successful completion of this operating cycle, you will make a $50 profit. The next successful completion of this operating cycle, you'll make another $50 of profit. And this cycle is going to continue on and on. And every time this cycle completes, it will give you a $50 profit. That's how the operating cycle works. So we understand the mechanics behind the operating cycle. Give me a feedback in participants, green check or red cross. Amal and Madiha, आपको नहीं समझ आई बेटा? Okay, Amal. Okay, good. So now Now we will bring this entire thing into overall perspective. And I'm going to use my favorite analogy of the fish and aquarium again here, because that is, I can't find any better example to sum up the two. So that's your aquarium, that's your fish. Fish basically is the operating cycle, and the operating cycle is all dependent on the inventory of, obviously. So this is your aquarium. This blue square is this blue rectangle is representing your aquarium. Your non-current assets, the purpose of the non-current assets is to provide that infrastructure, that immovable, permanent infrastructure. Without this infrastructure, the business or the fish cannot exist. And this infrastructure is usually provided by land and buildings, furniture, fixtures. These are the few examples that we are already familiar with, right? So without this, when you buy land and building, furniture, fixtures, plant and machinery, or any other non-current asset, the जिसका purpose infrastructural stability provide करना है, so obviously you don't buy such assets with the intention of selling them again. You buy these assets with the intent of keeping them and using them for over a long period of time. That is why non-current assets need to be understood separately. Then comes your fish inside your aquarium. So this is your aquarium and that's the fish. That's the purpose of the fish, the operating cycle or the principal business activity, which means buying and selling of goods. And all of this operating cycle consists of four fundamental accounting items. Your inventory, which will be converted into your debtors or trade receivables, which are eventually going to be converted into cash. That's how things are going to work. And creditors or trade payables, these are the people who are obligations to you, but without these people, you cannot have inventory because inventory comes into existence in your operating cycle only because you buy them from the creditors. So these four items together, they make your uh, they help you maintain your operating cycle. In every successful completion of a cycle, you always end up making profits. Why do you make profits? Because when you buy inventory from your suppliers, you buy them at a lower, relatively lower cost, and when you sell this inventory to your debtors, you sell it at a relatively higher value selling price. So this operating cycle is represented by these four new terms that we have, not new, we have seen those terms before, witnessing them in a different light now. They represent your main principal activity, business activity. So all of these together is what we also refer to as all of them together is what we also call the working capital. मैंने लिखा नहीं है इस स्लाइड में, मैं लिखना भूल गया हूँ. But all of these entries are also what we call working capital. Working capital simply means inventory plus debtors plus cash minus creditors. Why are we subtracting creditors? Because the all of them are your assets and this is your liability. So assets and liabilities, they are opposing forces. They will also consume, they will always consume each other. So inventory, debtors, and cash, they are your current assets. We call them current assets, right? And creditors are what we call current liabilities. In accounting, when we use the term current, that means something which has an age less than 1 year. If something has an age, an accounting age of less than 1 year, we always use the term current with that. And if something has more than 1 year's lifespan, चाहे वो asset है या वो liability है, if something has more than 1 year's lifespan, we call it non-current or long-term, right? So creditors or your suppliers are the people you owe for inventory, so that is why they are your liability. And since this liability is going to be due within 1 year's span of time, we will not just call a simple liability, we will label it as current liability here, right? And inventory, debtors, and cash, they are all your assets by nature, but these assets do not have an age more than 1 year's lifespan. So that is why we will term them as current asset, right? And finally, the working capital here is simply your current assets minus current liabilities. So you can note down these connections in your notebook. I forgot to put them on the slides. So you need to know, what do we mean by working capital? Working capital means current assets minus current liabilities. That is what we define working capital as. Okay. And what do we mean by current assets? Assets which have a lifespan of less than 1 year, we call them current assets. And current liabilities are the liabilities which are due for payment within 1 year span. If there is a liability which is due after or more than one year's time period, we call it a non-current liability. Like a bank loan is an example of a non-current liability, right? But a creditor or or trade payables are an examples of your current liabilities. So we understand working capital, current assets, and current liabilities. Give me your feedback, red or green check. Okay, very good. So now we will move on to the double entry system. So all of this theory conceptual part needs to be understood outside the double entry system first, their connections and everything. Now we are going to bring all of this discussion within the double entry system. When we use the term double entry system, that means we are talking about what to debit and what to credit. We will be dealing with the transactions involving inventory, trade receivables, trade payables, cash, जो भी ऑपरेटिंग साइकिल के कंपोनेंट्स हैं, हम उनके साथ डील कर रहे होंगे, और फिर हम देखेंगे कि उन ट्रांजैक्शंस को हम किस तरह decipher करेंगे into debits and credits, and then later on we will post the same in the ledgers and so on and so forth. So your inventory of goods, it has a very special place in the double entry system, as we have seen, because this inventory is responsible for calculation of profits. So every transaction that involves movement of inventory, a movement of inventory is when you receive inventory or when you give away your inventory. Every movement of inventory is going to be recorded separately. So your inventory is not going to have one account in the ledger, unlike every other item, unlike everything that we have seen before. If you have a vehicle, you will have one account in the ledger. You buy the second vehicle, you will treat it in the same account, right? You will just have one account in the ledger representing one non-current asset, right? Inventory will not have one account. Inventory will have at least two accounts, up to four accounts, but at least two accounts. So inventory in your ledger is going to be represented by two main ledger accounts. And when we are using the term accounts, we are referring to those T accounts, जो भी हमने अभी assignment के अंदर अभी किया. So the two main T accounts or ledger accounts that we are going to be using to represent our inventory is what we call purchases account, which obviously, as the name suggests, this particular account is going to be used every time we buy goods. By inventory of goods, we will always use the purchases account. And when we sell goods, right, then we will always use a separate account for this movement. So inventory movement, you can see these arrows over here. These arrows tell you about the movements of inventory. So every time you buy inventory of goods, your existing inventory of goods is going to increase. The asset of inventory of goods will increase. And every time you sell goods, your sales account is going to be debited or credited. We will discuss कि हम उसको कैसे करेंगे. But your sales account is going to be debited or credited, and that actually causes your inventory of goods to go down, right? So there are, now first, every time we have to decide on the debit and credit part, or we need to understand the double entry system, then whatever accounting items we are considering, we have to first decide on their intrinsic or inherent nature. Just like हमने पहली जब चैप्टर 2 के अंदर डबल एंट्रीज पढ़ना शुरू की थी, तो हमने सबसे पहले एसेट्स, कैपिटल और लाइबिलिटीज की जो इनहेरेंट डिफॉल्ट नेचर थी उसको पहले आइडेंटिफाई किया, क्योंकि वो उसी डिफॉल्ट नेचर की बेसिस पे फर्दर डबल एंट्री रूल्स आप क्रिएट करेंगे. So you can see it on the screen here, the purchases account that we are going to create in the ledger, and the purpose of this account is to record every time, every that transaction that when we buy goods, that purchases account will have an inherent nature of debit. If you agree or disagree with this description, just use the green check or red check in the participant window just quickly. Do you agree that purchases account is always is the purchases account that we are going to create in a ledger will have an inherent nature of being a debit balance? So we agree, but we understand the reason why? Why would it have a debit nature associated with it? There are many ways of looking at it, but right now there's one very clear uh, reason to see it. You can see this arrow here. Every time you buy goods, you're contributing towards your existing inventory of goods. So that is why every time you buy goods, your inventory asset is going to increase. So that is why it has an inherent nature of being debit, right? So let me clear it again. Do we understand why purchases account carries an inherent nature of debit? Because every time we buy goods, the purchases account will always contribute towards increasing your inventory. Give me a green check or red on the participants, right? So the purchases account is the new account that we have introduced ourselves. इससे पहले जो चैप्टर 2 की असाइनमेंट आपने सबमिट की है और आज आप करेंगे, उसमें ये अकाउंट एग्जिस्ट नहीं करता, तो उसमें कोई भी इन्वेंट्री रिलेटेड ट्रांजैक्शन एग्जिस्ट नहीं करती थी, राइट? सो अब से आपके पास एक नया अकाउंट क्रिएट होगा, परचेजेस अकाउंट, एंड दैट परचेजेस अकाउंट हैज एन इनहेरेंट डिफॉल्ट नेचर ऑफ बीइंग डेबिट. Understood? And you can always give me your answer in the chat box. What do you think sales account's inherent nature should be? Sales account represents selling of your inventory. So every time you sell your inventory, you are going to record that sale of goods in this account. But before we record anything in any account, we need to understand their inherent nature. So what do you think sales account's inherent nature should be? Right, credit, credit. Everyone is going to agree on credit. And now we know the reason as well now. So one of the many reasons you can justify the credit nature of sales account is that every time you sell goods, your inventory of goods is going to fall or decrease. And inventory being an asset, decreasing would mean it's a credit natured event. So sales account always is a consequence of a credit natured event, and that is why sales account's inherent nature is always going to be credited. Whereas purchases account consequences are always that the goods inventory of goods are going to increase, and that is why increase in the asset always has a debit nature to it. So excellent. So far, so good. So these are the two main accounts that we are going to prepare representing the inventory of goods. Remember, we do not create inventory account in our ledger. Every time there is an inventory movement involved, we will either record that movement in the purchases account or in the sales account, depending on what sort of a movement there was, right? But these are not the only two inventory movements. Acha, why do we need to keep it separate? Why can't we just debit the inventory account every time we buy goods and credit the inventory account every time we sell goods? Why can't we keep it simple? Have one account called inventory account और इसी को डेबिट और क्रेडिट करते जाएं, उसमें क्या हर्ज है? You understand? जैसे हम vehicles को अगर if we buy vehicles, we'll debit the vehicle account. If we sell a vehicle, we'll credit the vehicle account. We just need one vehicle account to deal with all the transactions about vehicle. Why do we need to keep separate accounts for inventory? Why can't we just make one account for? Yeah, but the question remains valid, Mahin. Mahin says that we will also have return of goods. Yeah, but that's the point is why can't we have one account? We will. Chalo, let me introduce the returns here since Mahin has mentioned it. There are two further possible movements of inventory. One is what we call purchases returns, and the other one is what we call sales return. Purchases returns का मतलब क्या होगा कि आपने जो goods previously खरीदे थे अपने supplier से, those goods have some issues or something, or they were of wrong description or something. So you had to return them back to your suppliers, right? So purchases returns is purchases because of being faulty goods or wrong subscription, wrong specifications, you had to return them back to your suppliers. So purchases returns account should have an inherent nature of credit because it's the opposite of purchases. So if purchases have a debit nature, the purchase return account must have a credit nature because that's an opposite of each other. Do you understand the meaning of purchases return and the purchases returns accounts inherent nature? Give me your feedback, please. Good. Amal and Madiha. Yes, Hadia. Yes. Hadia has come up with an explanation. Yes, Hadia. Let me explain what Hadia means in a bit. Let me just define sales returns first, and then I will explain what Hadia has meant here in this uh, in this point here in the chat. So sales returns का मतलब है we sold goods earlier on and our customers have returned those goods back to us, and that means sales returns will have to have the opposite nature of sales. Sales का मतलब है you sold the goods, and sales returns means the goods have been returned back to us. So that means these two have to have opposite natures. So if sales have an inherent nature of being credit, then sales returns must have a debit nature. Do we understand the meaning of sales returns and the inherent nature of sales account? In your in the feedback in the participant windows, green check and red check, right? Madiha and Misha. Okay, Madiha. Okay, good. Now coming back to the question, what do we conclude from this slide here? That inventory is one asset, but this asset will have four different accounts. You'll have one, two, three, and four different accounts. So one accounting item represented in your ledger in four different T accounts. Ledger का मतलब आपको पता है जहाँ पर हम T accounts वगैरह create करते हैं, your accounts जो हम बनाते हैं. So अब इस particular accounting item जो नई आई उसके एक account नहीं होगा, unlike land and building or vehicles and furniture and fixtures, they are all represented by just one account. This particular asset is going to be reflected in your ledger in four different accounts. और वो चार different accounts हम क्यों बनाएंगे? Let me explain what Hadia's answer there is in chat box. The purpose of this inventory is to calculate profits. How do we calculate profits? We need to keep a separate detailed record of everything that will affect your profit. So purchases account, अगर हम अपनी सारी purchases की transaction अलग रखेंगे, sales की transactions को अलग record करेंगे, और अगर कोई returns हुई हैं उनको भी अलग अलग record करेंगे, only then we'll be able to compare these items to figure out what our profit is. You understand that it will be very convenient and very detailed calculation for us to see how much profit did we make. So in order to calculate the profit, we need to know what was the selling price of the goods that we sold. That is going to be the balance carried down of this account. Do you agree with this? Sales account will have a balance carried down, just like we learned in the previous chapter. So whatever balance carried down comes in the sales account, that tells you that whatever sales you have made during that period. And that closing balance can be compared with the purchases account's debit balance. We will have a credit balance here and a debit balance over here, and we will compare these two and also consider these two purchases and sales returns. Only then we'll be able to calculate profit. This chapter, second half of this chapter, deals with how to compare the results of these four accounts, how to compare the closing balances available in these four accounts, and how to materialize these balances into one value of profit. So this chapter is going to take a little time, extra time. So first we will learn the bookkeeping procedures about the purchases, sales, and returns. And then we will see how we use those results of these four accounts to calculate our profit. And that profit is the reason why we have such details which are only applicable to this one asset, and why we don't have this sort of a breakdown of accounts or the details of accounts for any other non-current asset, because this particular asset is responsible for generating profits. And the profits require detailed calculations, and that is why we have all of these accounts maintained separately. So we understand the reason why inventory asset has four accounts in the ledger, whereas all the other non-current assets that we are familiar with, they are only represented by just one account in the ledger. Inventory will be represented by four accounts. Give me a green check here if you understood. Okay, Lina Vakas, nahi samajh aaya. Okay, anyone else? Okay, Iman Badr, very good, very good. Fajr, we understand? Okay, okay, Alina, Iman, describe your problem here. Then I will I will repeat it, right? What part we don't understand? That, or you can unmute your mic if you want to. It's all right.
So for me, the problem is just about why it takes four accounts just to figure out the profit.
Yes,
So
yes.
that's
Okay, very good question, Iman. Why we have four accounts? To just for the reason of calculation profits. Remember, your accounting is about business evaluation, and profit is one of the most important indicators of your performance. So this is just the beginning of calculation of profits. The profit calculation is far more detailed than this. This is just the tip of the iceberg here, right? So why we need to keep separate accounts? We could actually calculate profit by maintaining just one inventory account. I know, excellent. But the problem is that your objective is not just to calculate profit, but your objective is also to evaluate the practices which led to those profits. For instance, if you do not have purchases returns or sales returns account maintained separately, you will never know that whose inefficiency was at work at that point. Remember, returns, whether these are purchases returns or sales returns, is something undesirable for business. Why is it undesirable? Because sales returns तो obviously आपको समझ आ रहा है कि आपने goods अगर बेचे थे तो किसकी गलती थी कि ये goods गलत description के चले गए customers के पास, या whose error was that, whose mistake, who's responsible for this error that the goods got damaged in transit. So this requires investigation, because this inefficiency is causing your profits to go down. Every time resources are wasted or time is wasted, that is going to cause your profits to come down. So that is why you need to have every event recorded separately so that it catches your attention. If you merge them all together into one account, you will not be able to see these events separately. You will not be able to see whether your sales have improved over the years or not. लास्ट ईयर अगर आपने इतनी वॉल्यूम सेल्स किया था, क्या इस साल आपकी सेल्स इंप्रूव हुई है ना? That analysis is not possible if you don't have separate record of sales. If you don't have a separate record of purchases, you will never know that your credit and control department is doing their job effectively or not, because they are responsible, or procurement department is responsible for collecting these goods. So you need to keep these financial records separately so that you can eventually evaluate individual business segments. बिकॉज अभी तो हम बिल्कुल बेसिक्स में है ना, अभी हम लेटर हम बिजनेस इवेल्युएशन के ऊपर जाएंगे, तो हमने बिजनेस के हर डिपार्टमेंट को इंडिविजुअली इवेल्युएट करना होता है. आर दे परफॉर्मिंग up to the mark or not? So that is why we need to have these accounts separately. It's not just about profit calculation. Profit calculation obviously is going to be facilitated by this process, but in addition to that, it will also help us to see the performance, who is being inefficient. These returns are inefficiencies. Returns के अंदर पैसे भी ज़ाया होते हैं. आपको goods वापस अगर भिजवाने अपने suppliers पे, it will cost you fuel, it will waste a lot of time. और अगर आपके customers आपको sales returns करें, that means they are dissatisfied with your service, and you're not going to just lose financially, but you will lose customer loyalty, and there are so many non-financial factors at play. So you need to have all of this data maintained separately so that later on it will be used to calculate profits, number one. And number two, the same data is going to be used for evaluation of different business segments. That is why we need to keep it separate, right? Okay, Alina, do we understand? Okay. Iman Badr has, it's four types. Iman, I'm sorry, I can't understand your question. It's four types. Is that a question or some description? You can either unmute your mic. Huh.
My question was the same as Alina.
Okay, great.
I understood.
Okay, excellent. Chalo, great.
Thank you.
Now we move on to the double entries or the journal entries that we will be needing, right? So the journal entry or the double entry system. So this is the inventory at the heart, and now we know that inventory for accounting purposes does not exist. Inventory is going to be represented by four separate accounts. Each of these accounts we have already seen its default nature. So inventory is created by buying these goods from our suppliers, we call them creditors, and we further sell these goods to our trade receivables, and that's how we make our profit. So this is our first movement here. So you can see there's this yellow arrow. Which inventory movement do you think it represents? We know there are four possible inventory movements: sales, purchases, returns, sales returns, and purchases returns. So which particular inventory movement are we talking about here? Alicia says purchases. Maheen says purchases. Very good, Maheen. Asma says purchases. Good. Alina says purchases. We all agree it's purchases, right? Because we are obviously, if the goods are moving from our suppliers to us, that means we must have been buying these goods. Yes, we all are correct. And this movement is going to be recorded to the purchases account, right? And purchases account, do you agree with this journal entry? We will debit the purchases account and we will credit the creditor X's account or supplier X's account or जो भी उसका नाम हो, right? Give me a green or red check here, right? Why are we debiting purchases account? Because you can see purchases account is contributing towards the asset of inventory, right? And why are we crediting the creditor X's account? Because creditor X is our liability, and buying goods on credit from X actually makes you owe him more. We understand this journal entry? Yes, very good. All of us understood? Okay, good. Now let's see how do we interpret this second movement. This is a movement of inventory from our premises to our debtors or trade receivables. So this must be, Mehreen says sales. Absolutely, Alicia, very good. It must be sales, right? Because our inventory is going to our trade receivables or debtors or customers. Customer is a more general description of our trade receivables. We prefer using the term trade receivables or debtors, but right now you can say customers ke paas ja rahi hai. So yes, this is your sales. And now how do we journalize this entry? You can see we will debit the debtor Y's account, whoever the person involved, and we will credit the sales account. Why are we crediting sales account? Because you can see this inventory movement is causing you to lose your inventory. Your asset of inventory is going down. So that is why sales account is going to be credited. Understood? And we are going to debit the debtor Y's account or the receivable Y's account because this guy owes us now. So anyone who owes us our money becomes our asset, right? So that's why debit the debtor Y and credit the sales account. This is how we will record the sale of goods or sale of inventory. We understand? Give me a green check here, jaldi se. Okay, Asma, we don't understand. Good. Anyone else? We don't understand that? Amal and Madiha, we understand or we don't understand? Okay, Asma. What? Okay. Do you agree with this? When we sell goods, we create a sales account, and we need to debit or credit the sales account. It depends on whether we're losing inventory because of this event or we're gaining in the inventory because of this event. So when you sell goods, you always sell goods your trade receivable, so you lose your inventory, and that is why we credit the sales account. And we are debiting the debtor Y account because someone owes us money now. Someone, remember property and receivable discussion, right? Yeah, you remember the property and receivable discussion? that our asset, if we have it in our possession, that's a property type asset. But if our asset is lying in with someone else, that becomes a receivable type asset. So do you agree with this, that our cash is now lying with the trade receivable here? So that trade receivable becomes an asset to us. Great, great. Moving on, we're about to run out of time here. Okay, how do you interpret this third arrow, yellow arrow? From trade receivables to our premises, our inventory. It's sales returns, Alicia says. Very good, Alicia. Maheen says, sales return. Very good, Maheen. We all agree it's sales returns, obviously, because we must have, why would our customers return goods back to us? It must have been something wrong with that, or something faulty, or something else. So this is sales returns, as we correctly identified. Now, how do we journalize this sales returns? You can easy let me make it easy, we're running out of time. The tip of the arrow is always the debit part of the double entry, and the tail of the arrow is always the credit part of the entry. I will explain it in a bit. So you can see sales returns are contributing, are increasing our asset. So that is why sales returns is going to be debited, and the debtor Y is going to credit, because debtor Y owes us less now. He has returned the goods back to us, so debtor Y doesn't owe us as much as before. We're losing our receivable here. So we debit sales returns account and credit the debtor Y's account. So if we understood the journal entry here, give me a green check quickly. Amal? Amal? Acha. Okay, good. And finally, this movement here, our inventory is going to our suppliers. This must be returns, purchases returns, or returns outward भी उनको कहते हैं हम. So purchases returns, and in this case, you're losing your inventory. So you will credit the purchases returns account here, and you will debit the creditor X's account here, right? Why are we crediting the purchases returns? Because you can see we are losing our inventory. So inventory is being lost. So you can credit the purchases returns account here for that. And we debit the creditor X's account because our liability towards creditor X is also decreasing, right? So we understood these four transactions here. These give me a green check if you do, and if you don't, then a red. Red for sure, okay, if you don't understand it. Marine, okay. So now we can so this is our summary here. You can take a screenshot for your upcoming assignment, right? Every time you buy goods, this will happen. Every time you sell goods, this will happen. Every time goods are returned back to you by your customers, this journal entry is going to happen. And every time you return goods back to your suppliers, you will record it like this, right? So we have sort of run out of time today. Up, okay, there is no homework for today. I just want you to focus on these parts. I have recorded this class as well. I'm going to share this video as well, so you can watch it for your later reference. We will continue our chapter 3's discussion tomorrow. Okay, so stay back if you need to ask any question, or now you can leave this meeting and move on to your next class. Thank you, Asma. Thank you.